Okay. Yeah.
Oh, beautiful. Okay, awesome. So let's talk about this concept right now. Let me repeat for the recording. So I'm gonna explain something called the ledger concept, and after I explain the ledger concept, I'll explain the difference between the new GL and the classic GL. Okay. So the ledger concept first. Ledger concept, it is just having different values for the same GL for the same transaction. Imagine you have a GL account, for example, GL account 2400. This is a GL account that you have. Imagine this GL account for this transaction. For this transaction, you have 6 million, okay, and 6 million and 5 million, okay. What do I mean by that? 6 million and 5 million. What does that mean? What does that mean? Sometimes, and usually, whenever we have something which we call parallel accounting, okay, parallel accounting, meaning in accounting there's rules, okay. We call them GAAP, which is general accepted accounting principles. General accepted accounting principle, okay. So this is just general information right now. So sometimes the same exact company, they have to actually report their transactions or report their statement from based on the US GAAP and based on the IFRS. Both of them are different rules of accounting. For example, when you actually buy an asset, especially in assets, whenever, for example, when you buy an asset, the accounting rules for the US is way different from the accounting rules for Germany or for Europe in general. So for what we consider to be an asset is different than what German people or European people consider as an asset. For that reason, okay, when you capitalize here, the capitalization value or the asset value is going to be different. Okay, for example, on this deal account, from US perspective, it's about $6 million will be recorded as an asset. From IFRS perspective, IFRS meaning just like European thing here, is considered as $5 million to be considered as an asset value. What about the $1 million? The other $1 million is considered expense, has to go to different GL account because I'm just giving an example, which is a real example. They didn't consider the trees around the building and the pavement. They didn't consider it as an asset. That's why you see the dollars amount of the assets is less money. So this we call it capitalization value. But I don't want you to focus on capitalization value. Any GL, whether it's asset, GL account. So if somebody asks, what is the ledger? Okay, what does the ledger give you? What does the ledger allow you to do? Ledger allow me to to have multiple valuation for the same GL transaction. Okay, multiple values for the same GL transaction. It gives you just like a different dimension where you could accommodate scenarios like parallel accounting. Does that make sense? If you say this stuff, you definitely know what we're talking about. And then you don't stop. You have to go follow it up with an example. I'll give you one example. For example, when we actually buy an assets, and we are a US company, so we have to actually report our transaction based on the US GAAP. At the same time, we are a global company. We have to actually present our financial statement based on the IFRS. For that reason, we have to accommodate both accounting rules in our company, US GAAP and the IFRS. For that reason, we use the ledger. Okay, use the ledger concept. And what did we do in the ledgers? This is what we did in the ledger. Leading ledger, we created something called leading ledger and created something non-leading ledger. Non-leading ledger. Usually, the leading ledger has to be assigned to something which we call it accounting principle. Accounting principle. In our case, our accounting principle is US GAAP. Okay, this is the leading. That means this is the main for the country. For the US, the main for the country is US GAAP. So we created in SAP, we created something called accounting principle, and we gave it the definition and we gave it a description as US GAAP, and we assigned the leading ledger to the accounting principle to the lead, sorry, we assigned the leading ledger to the accounting principle, which is US GAAP, and we created something called non-leading ledger. That means whatever is the other accounting rules that you wanted to adopt in your country, but it's not the main one. That's why we call it non-leading ledger. And this one we assigned it to accounting principle, but this one is different. This one is IFRS. Okay, so remember, okay, how can you actually have the parallel accounting defined or designed in a company? You're gonna have account. You're gonna have, yeah. You have to. You want to use the ledger concept. What did you do? You create a leading ledger and non-leading ledger. You assign the leading ledger to the main accounting principle, like in our case is US GAAP, and you assign the non-leading ledger to the non. You assign the non-leading ledger to the other accounting principle, which is in our case as well, which is IFRS. Okay, let's say you have six. You say a company has to actually report their financial transaction based on the China gap, or based on the Italy gap, based on Latin America gap, as well as the US gap. So the US gap, since it's US company, the US gap is going to be the leading ledger, and you can create five other non-leading ledger. If they ask you how many ledger you can create, one leading ledger that you can create as a maximum. You have only one as a leader, and you can have unlimited non-leading ledger based on your requirements. How are we doing so far?
Pretty good.
How are we doing so far? I mean, are you guys actually up until now? Are you guys understanding?
Yes.
Yes.
Okay, okay. So this before the new GL when it came, the new GL when it came with new stuff. One new table, okay, new table which is Fago Flexa T table, Fago Flex T table. Okay, and what else? Ledger concept. It came with a ledger concept. And what else? It came with, okay, what else it came with? Document splitting. Okay, so this is the stuff that it came up with. New table, ledger concept, and document splitting. Okay, so before that, before in the classic GL, okay, guys, I need to excuse me now for just like for a few minutes, and I'll be back because the partner he wants me to be talking to him, and I'll tell you what his story later on. You can pause the meeting. New GL, Parallel Ledger. Okay, Parallel Ledger. This Parallel accounting, they call it Parallel Ledger, the functionality itself. Parallel Ledger is a functionality. It's called Parallel Ledger is a functionality which it helps with parallel accounting scenario. Parallel kind of scenario which I explained a few minutes ago. Let me just stop here for a second so I can collect my thoughts. Leading ledger, not leading ledger. Okay, yeah, we said the new GL, it does have functionality where it does have the table, does have the ledger concept and the document splitting. Okay, what is this new table? What is the difference? Now I'm going to talk about what is the difference between classic GL and the new GL. Okay, the challenges with the classic GL. Okay, challenges with classic GL. Challenges with classic GL. Okay, so here's the challenge with the classic GL. Whenever they want to actually do like parallel ledger, okay, there's so many. Okay, we have to create ledger. Okay, we have to create ledger in the system. Okay, and the ledger, it's not like whatever the ledger that we call it. For example, for the profit center, we have to create like more configuration, which is like a ledger for the. Okay, anyways, let me just stop here because it's very confusing. Okay, the challenges, it is very hard, and we need to do customization to fulfill the Perl accounting, and it does not meet the segment reporting requirement, which I'm going to explain if you in a second, because this is the segue about what you're going to be talking about. Segment reporting requirement. This is a requirement by IFRS. Okay, IFRS 15. Okay, you can read about it, segment reporting, where it became mandatory for companies that they do work in Europe, which is most of the U.S. companies. They have to actually adhere to the segment reporting, meaning every single thing that they create in their financial statements, they cannot just create profit and loss like just generic. No, they have to do the financial statements per segment. And as we all know, the segment is the line of business that the company have. For example, if I have a company that it manufactures cars, it manufactures motorcycles, and manufactures dishwashers, then they have they have to create financial statements for each one of them, which is more of like deeper level, which is slicing and dicing in financial statements. Does that make sense?
Yes.
Okay, so this for this reason, to meet this functionality, this is where document splitting came into the picture. Okay, okay, this is where the document splitting came into the picture. Okay, before I move to document splitting, I was in the table. Let me show you the table right here. So this is the table, or this is the Fagoflix table. It shows the ledger information, as you can see. That's why we call it the total table. It does have all the information about the ledgers and all this kind of stuff. If I go to GLT0, this is also the called record table. Let me just get here. If you see here, it doesn't have the ledger information. And for us to do that, we have to create multiple other works. So for example, here, look at the ledger. You have always just zero. It's just empty. You didn't have the ledger information. You have nothing. Oh, wait a second. Oh, this is not right. This is not right. Okay, anyways, we are in a new GL. So whatever you see here is not what the classic GL is. But this is one of the differences that we have between the two systems. Let me just go back. Yeah, yeah. I'm not able to actually show that. We're not in the classic GL. We're in the new GL. The way that we know you're on the new GL, the new GL, it comes with all this. It says new. Whenever you see financial accounting new, that means it's a new GL. You have a new GL. This is a new GL system. Let me just go back here. Okay. Now I'm going to talk about the document splitting. It is a functionality. It is a functionality that okay came in new GL to fulfill the segment reporting. Got it? To fulfill the segment reporting. And I'm gonna just show it to you here simply what it is. Let's say, for example, we have a vendor invoice. This is the simplest example that you would ever think of. Vendor invoice. And here what you have. Okay, we're gonna debit the account, we're gonna debit the inventory account or the expense account, depends on the transaction. Debit the expense and we're gonna credit the account payable. Okay. And as we all know now, every expense has a cost center. Every cost center has a profit center, ideally, in the company. So let's say here there is profit center one. Okay, let's assume that. So if we have a transaction like this, okay, like debit $100, which is the expense account, and $100 as the account payable to profit center one, this one has no problem. It's gonna meet everything. It's no problem. But we're gonna have a problem here in the account payable. It does not in the this one. Okay, in this GL account, which is liability account, which is balance sheet account, as you can see here, there's no profit center. There's no segments to it. There's no segment. There's no profit center. So this is one of the issues. Okay, this is one of the issues. The balance sheet item, it does not have a, like a profit center to it. Okay, this is one issue. What's even a bigger issue is, imagine that you have a vendor invoice. You have vendor invoice. Say you have two different GL accounts. Let's say here expenses, which is we have expenses which is $100, which is expense to this profit center one, and we have another expense. You can have multiple line item, right? $200, or let's say here $50 to the same expense account, but this one to profit center two, and here we have credit $150. Okay, which is to the balance sheet, which is the account payable balance sheet, which is not assigned to any profit center. I want you now to think with me. Profit center is a segment, and in the segment reporting, what they say is every transaction has an impact to the balance sheet or the P&L, has to have a segment associated to it. So how did the document splitting fix it? Okay, the document splitting fixes it that way. So whenever you have a transaction like this, okay, I want you to forget about this one because it's an easy one now. So whenever you have a transaction like this, okay, two line items, expense with separate or different profit centers, while in the balance sheet account, there's no profit center associated to it. This is what the document splitting did. They fixed it this way. So the document splitting, what it did, so it created, it split. Okay, let me just back in. You see this document here, this line item, which is the balance sheet. If you see the balance sheet line item, what the document splitting is, it took the balance sheet and it splits it based on the same ratio of the P&L GL account. When I say P&L, that means the expense GL account. It's a P&L. Okay, I'm gonna repeat it again. What document splitting do? What does it do? It splits the balance sheet GL account line item into multiple lines in a proportion to the expense line items. Okay, for example, now as you can see here, okay, $100 to profit center 1 and $50 to profit center 2. So what the document splitting it did is $100 is still 150 for the account payable, profit center 1, and added another line item. It split this line item into 2. So now we have $50 account payable to profit center 2. Does that make sense? No.
I see.
Okay, but that's all what it does. It splits the balance sheet line item into multiple line item based on the expense or the P&L line items in the transaction. Okay, I want to give you 1 second just to think about it, to look at it. What do you guys think? You guys got it? No? Yes? Maybe?
Yes. Yes.
Okay, I'm gonna do it
Yes.
again now. I'm gonna give you another example just to make sure that you get it. So let's say here we have, uh, let me just say, I like to have that one. Let's say simple. Okay, we have a general, like a general document, general journal entry document. Okay, where we do like debit the expense and credit the cash. Okay, we paid for the rent. Okay, for example, we paid to the rent. We paid to the rent, and in that we have to take the money from the cash account. Let's say when we paid because we have two different storages, one for the accounting department, another one for the production department. So it's going to be still the rent account. So you have here about $3,000, $3,000 for the rent. This one for what? For profit center 1, but into profit center 1, I'll say here this is for the finance department. For the finance department, and the other one here is about $2,000, which is, let me come back here, another rent, but this time we had the production department. We have two warehouses, okay, and the money came out of what? Came out of the cash. Came out of the cash. Okay, we have $5,000. Okay, how can we split that? I want somebody to help me and to write it in the chat box, guys.
What do you mean, like where the CR or the credit will be 3,000 AP to finance and 2,000 AP to production?
Yeah, put it. I want to see the accounting entries in the box, chat box. Let's see if anybody can do it rightly. Oh, we got some people here. Herman says debit. No, Herman is not correct. Uh,
I didn't
is
finish. I just pressed
I?
enter and then everything went.
It's okay. You can run again because I just want to see what you guys think. Akalabi, sorry, Aiken is not correct. Deepika is not correct. Temi, Yeah, am I gonna say that? That's the right answer. That's the right reduction. Then you're gonna credit. Excellent. Okay, Tammy, good. Dupika is not correct. Oh, Dupika. You said credit,
It's
2000,
goes to
2000.
profit center.
Okay, okay, which is to the cash. I'm assuming to the cash. Okay. No, Aiken still again is not correct. Maria, debit 3000, credit 3000, AP finance. Maria is not correct. Herman, again, I don't see profit centers, is incorrect. Credit 3000, account payable finance. Okay, credit 3000, 2000. It's not account payable this time. You just got to be careful. Okay, we have a cash account now. Okay, let's get back here. So, okay, I'm going. Yeah, thank you so much for really participating here. But okay, so this is our transaction. Okay, debit rent and credit cash, $5,000. All what you need to do. So I'm gonna repeat the whole thing again. So all what you need to do, this GL account, we're gonna split it. Instead of credit 5,000, we're gonna credit cash, but it's gonna credit 3,000, and we have to have the finance, not the production, the finance, because 3,000 is finance. The finance profit centers, and we're gonna do another line item, which is to the cash, but this time it's 2,000 for the production. Does it make sense?
Yes,
Yes,
it
no.
does.
Yeah, this
Yes, it does.
example would help a lot.
Good, 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 good. Herman, you got it, right?
Yes, yes, I got it.
Okay, awesome. Okay, so that's exactly what it is. If you couldn't do it in the paper, you will never be able to do it in the system. And for you, you have to be comfortable to explain it to the business. So there's three different kind of document splitting. I'm not gonna actually talking so much about the three type, but I'm gonna say it quickly. There's types of document splitting. There's three different kind. One, which is which is the we call it active document splitting. Active document splitting. This is what we just saw. It's active. We have to configure the system for that. We have to configure. But and there's something else which we call passive document splitting. We do not have to configure the system. Uh, it happens. Okay. Okay. It happens just by default. It happens. You didn't need configuration. You don't need configuration. Third thing is something called zero balance. Very very easy concept. Zero balance document splitting. So So let's talk about the passive. Passive, I'm not gonna go in a whole lot of detail because anyways you can't control it. This is just like it's inheritance. Usually we call it inheritance. Okay, inheritance, which means, for example, I'm not gonna explain what inheritance means. You should know what inheritance means. Okay, you have, for example, a son. He inherits stuff from his dad, right? The same thing here. For example, if you have a payment, the payment will inherit. Will actually, the payment will be split. Will be split based on the invoice. Okay. Okay. By default, you don't have to do anything. For example, if you have a vendor invoice, which is document, debit the expense, and say you have two debits and the expense. You have two different expense PC2, Profit Center 2, and BC1. Okay. And then you have here, for example, credits the uh, let's say credit what credit the cash, credit not the cash, account payable, Profit Center 1, and credits here, Profit Center 2. This is the invoice. So when the payment happens, what's gonna do? It's gonna debit what? It's gonna debit the account payable, and at the same time, it's gonna credit what? It's gonna credit your money, cash. So so this split is going to be exactly like this split. So that's what happens. For example, if it's 30 40 is going to be split based on the same percentage, just exactly with the same ratio. Okay. Sometimes the payment is not the same like as the invoice. You have multiple line items because expenses, because tax, or because of discount or whatever. So but it's all about the percentage. Any questions? Is that clear?
it,
Is
it
it
will. I'm sorry. It will depend on what they established before, no, beforehand.
exactly what the payment splitting? The splitting at the payment time is going to be the same as the splitting ratio in the invoice. Does that make sense? No? Yes?
Yes, it does now.
Yeah. So, anyways, that's what it is. Usually, just if you know this, if you say this even in a call or an interview, it's very straightforward. Okay, there's active, passive, and zero balance. The active, and you explain the active, you have to be comfortable to say an example. You just say, okay, we're gonna split. The active is gonna split the line item of the balance sheet based on the P&L line items, and you give an example. For example, you have a vendor invoice, and the vendor. Let's imagine we have a vendor invoice with two debit line items. Okay, so we have a debit 100 to Profit Center 1 and debit 200 for Profit Center 2. And we have a credit for sure from the cash. Let's say, assuming from the cash or from the account payable. Okay, let's say from the account payable. Two debits and one credit. Two debits, which is two debits line items to the P&L GL account with two different Profit Center 1 and Profit Center 2. And we have one line item for the credit, which is account payable. So what the document splitting do is going to split the account payable line item to two different values, and these values usually based on the proportion in the P&L line items. For example, if the first line item is $100 and the second line item is $200, then the account payable transaction is going to be split 100 and 200. Okay, first one is going to be assigned to Profit Center 1, the second one assigned to Profit Center 2. Does that make sense for you guys? No, yes, no, yes.
Now I understand. Yes.
Okay. Okay. You have to be comfortable saying the example. A lot of people, and they don't believe me, a lot of people they don't believe me. Okay, they go there and they say the definition, and then they get the whole thing messed up because they were not comfortable to say the example. Example is long. It's long to say, but it's very easy. You should have that image in your head. Okay. You have two debits, one credit. The two debits, that separate, different profit center. And after we do the splitting, the credit, which is the line item for the balance sheet, is going to be split just like the P&L line items. Okay, this is what the active is. Passive usually is just like it doesn't need configuration. It happens by the system. And usually, as an example for that, whenever you have a payment, it will be split based on the same splitting that happens in the invoice. Zero balance. Now let's talk about the zero balance. Zero balance usually is used whenever there is two different profit center in the same document. Okay, it's just very easy. It's to balance the profit center. Okay, it's to balance the profit centers. And I'm giving an example here. Let's say here I'm doing debit and credit, same GL. Let's say same GL, GL1, and here is to the same GL, GL1. But I'm doing here for profit center 1, and here I'm doing profit center 2. So we have a document where it does have two profit centers in the same document, debit and credit, two different profit centers. What the system is going to do? System is going to actually do trying to balance this. For example, if you have 100 here, which is 100 debit, the system is going to do credit. Let's imagine here the amount was like $100. Okay, just to make sure that it's realistic. $100. So the system what's going to do is going to do credit on this profit centers, like with the same amount, $100 GL1. But it's not the same GL. We have a GL account which is we call it zero balance GL account. Sorry, zero balance clearing GL account. Okay. Okay, so this is the name of the GL in the configuration. We have zero balance clearing GL account, and it's going to be profit center 1. And same thing is going to be repeated for the other line item, but it's going to be instead of credit here, is going to be debit. And the reason we're doing that because we want to have the total of the total amount of the profit center in the document to be zero. As you can see here, forget about the GL, forget about everything. Look only at the profit center. So for example, here debits 100 at the profit center 1 and credit 100 at the profit center 1. So the total is $0 at the profit center. So we call it just like a trial balance. If you know trial balance, if you don't know trial balance, forget about it. It just helps you to uh, to balance to zero, to make the balance as zero for that profit center. Does that make sense? Yes, no, maybe?
Yes, it does, but it means the third one it will be debit, no? And the fourth one will be credit, if I'm correct.
Okay, I'm just going. Okay, it doesn't
No, no,
matter.
no, no. I'm just saying because of when you're explaining. I mean, like for example, for the second one, it says 100-year one PC2 is to be the R, no? Just clarification.
So
Okay.
this is the document. So this is the new item is going to be there. So that's the bottom of it. So you have this is the document before splitting. After splitting, is going to add two line items. Okay, imagine you have multiple line items. Okay, it's just easy. Okay, you have $200 here. You're gonna have GL1, and you have here profit center, uh, profit center one. Just to keep it weird. Okay, you have 100, 200. Okay, as you can see here. Oh, that's so stupid. Okay, anyways, so imagine that you have debit, debit, and credit $300. So imagine you have this one now. Okay, so now the system what's gonna do is gonna actually is gonna what system is gonna you see here profit center here how much you have money you have 100 and 200 so you have $300 of profit center one and you have $300 of profit center two. Does that make sense? So so now if you look here you have profit center one 100 and 200 profit center one and both of them are debit so the system is going to come now and it's going to say okay, total is $300 debit for that profit center one. So I'm gonna say credit $300 for zero balance GL account with profit center one. Okay, that's what the system does. And now here, profit center two, you have credit of $300. So the system is gonna come here and it's gonna say credit $300 for zero balance profit center two. Does that make sense?
Now, yes. Thank
Yeah,
you.
yeah.
Mhm.
Yes, we are just balancing the balancing the amount of the profit center. Okay, is it clear?
Yes.
Okay, awesome. So 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 now I want to actually tell you one thing. I've been saying profit center, profit center, profit center, but in reality, it's not profit center or it's not only profit center. Okay, this field which is needs to be split upon or the reference for splitting, it can be profit center, it can be something else. Okay, it can be technically any field. So the fields where the splitting should happen against against is called characteristic. Okay, characteristic could be any field in most of the time practical sense it could be profit center, it could be segment. Okay, could be business area, it could be anything. Okay, could be any field but in practical we use segment, profit center, and area, functional area. So these are like entities inside the system. Does it make sense?
Yes.
Yes. Okay, cool. All right, give me just like give me just like 3 minutes break. 3 minutes. Okay, now it's 7:57. Just give me 3 minutes and I'll be back. Sorry about that. Sorry about that. Let me just go there. So let's not go to the system and do it. Very easy. Don't panic. It's very, very easy. So let's try to go to the system and activate this functionality and see how it works. Let me just give you here just a little overview about the configuration. So the configuration is going to be something like this. So the configuration, you have to tell the system. First thing, you have to tell the system which GL account, okay? Which GL account is relevant for splitting, okay? Which GL account relevant for splitting? Okay, this is the first thing you need to do. And then tell the system which document type. By now, you guys know what document type is? We talked about it, right? No, you didn't get to know what document type is. No.
Mm-mm. Mm-mm.
Oh my gosh, I'm so disappointed. I'm shocked. Nobody knows. In this call, nobody knows what document type is. Nobody knows
It's
any
like
example.
the SA
Okay.
document type is for GL, AA for asset accounting, and
Oh, vendor.
KP, KB.
Yeah. Any accounting document, it will have two things for sure. Okay. One is the document type. Two is the posting key. Okay. Does it make sense? Nope. Maybe.
Yes.
Okay. You guys know what document type is? All right. Do you guys know what document tab is now? Okay. Anyways, so we have to tell the system. So the system here is going to ask which document tab to be relevant for splitting, which GL account relevant for splitting, which system asks what transaction is relevant for splitting. Okay, it's relevant for splitting as well. So after the system it does that, then the system we have to tell the system what is the characteristic. Anybody knows what characteristic means? To split the pawn. No?
Field.
Yeah, which field? Like, for example,
It could
anybody?
be segment.
Could be segment, could be profit center, exactly. So we have to tell the system what characteristics, and if you're using zero balance functionality, you have to tell the system what is the zero balance GL account. Okay, clearing account. What is the zero balance clearing account? We have to tell that. And finally, you have to activate the functionality, activate the document splitting. Okay, and guess what? If we activate it, anybody, okay, because part of our configuration, the GL, we had one piece where we actually disable or deactivate the document splitting in our company code. So if you deactivated the document splitting in your company code, you need to go and activate it. Otherwise, it's not going to work for you. So you're going to activate the document splitting for everybody, and you're going to activate document splitting for your own company code. And anybody actually today has a company code and it's working, but after we activated the document splitting, it's not going to work. It's not working. That means they haven't deactivated the document splitting for their own company code. Anyways, I'm not gonna I'm not gonna go deeper here because you're gonna see it by your own eyes. Let me go to the system. So let's go to the system. No T codes, nothing. So you just go to Spro. Go to Spro. Let me just go here, try to find it. Go here, financial accounting, general ledger accounting, new. Go business transaction, document splitting. Guys, see here, financial accounting, no. General ledger accounting, no. Business transaction. Under that, there's document splitting. So everything is here in the document splitting. Classify the GL. That means which GL for GL account for document splitting. And then classify document splitting. That means which document splitting document relevant for document splitting. Zero balance. You have to say what is the GL clearing account, and then you have to say what is the characteristics, and then you activate. Let's start to do it together. So come here. And it's going to ask you what is your chart of account. And my chart of account is B217. And click new. And this is going to ask you from which account to which account, which category. Well, let me just go there. See, I want to have, for example, balance sheet account. My balance sheet is about from 1000 to 1999. No, to actually 2999. At least this is based on. It doesn't matter. Whatever you have, this is at least what I have. And for the PNL, let me see here. For the revenue is about from 300 to 399. Let me here say the category for these GL accounts is you have to classify a GL account. So now I want to say anything that is related to the revenue. So let's say here this is the revenue, and I'll come here from 400 to oops 4400.
So basically all the account group, right?
Yeah, account group or how you want to.
Okay.
It doesn't have to be exactly the same. So for example, if you wanted to lump sum two group, for example here, I lump sum the assets and the liability under balance sheet. You could do the same. You could have assets and have different one, but it's up to you. You just bring in your GL accounts and put it under group. So for me now, this is for expense. This is for expense. This is for revenue, and this is for the balance sheet and for what they call it, uh, assets and liability. I want to have, for example, something for other. I can have something like this, and I'll say this is for others. If there's no other, they can put anything they want. I can just say, okay, I'm gonna just say this is material if I want to. I'll just say this is, I'll say cash discount, anything, it doesn't matter. So I'm gonna save it. Okay, at least if you look here, balance sheet, and make sure the group for the assets and the liability under the balance sheet. And for the revenue, I have from 300 to 399, 400 to 499, which is expense, and here for others, I call it customers. So just go here and get out and get out. We just now classified the GL. We need to classify the document type. The good thing, SAP actually classified all of our document types, so we don't have to do anything. Unless you create a new document type, then you need to make sure your new document type is right here. But as of now, all the document type is right there, so I don't have to do anything. Let me go back. And here's for the zero balance. I'm not gonna do zero balance right now. I wanna leave it blank. I wanna leave it, but I'll get back to it later if I have time. Now let's come here and the document splitting for GL. I already have profit center as document splitting. I don't want to have zero balance, so make sure I don't want to have zero balance. So I'm gonna leave it blank. So profit center is already here. In case if you need another field, always needs to come here, put another field. But for me now, I don't want any other field. Let me just come back here. Come back here. Okay. I, I deactivated the document split, the zero balance. There was a checkbox for the document splitting. I unchecked it because I don't want. Sorry, I don't want zero balance right now. I want to do it without zero balance. Then I'll do it with zero balance later on. Let me come back here for controlling. Let me see here. This one I don't need it. I don't need this one here. Now just go to the activation. Click activate. Okay, this is for the entire client. Okay, that means for the entire system that you're working on. So if I activate now, you'll find it already checked. Okay, so this is for the entire. Whenever I see here, this is for the entire client, not for my company code, not to a specific controlling area. No, it's for the entire client. So let's come here and I'll say activate. Click enter, and okay, and you save. So now I activated. This is now if I know my company is deactivated. So if your company is deactivated, it's not gonna work. So for me here, I'm gonna go under the deactivation per company code, and you go look for your company. Make sure it's not deactivated. My company is B217. And as you can see here, it's inactive, it's deactivated. I'm gonna click it here and I'm gonna save, make sure activating your company code. So I activate the document splitting, and remember here, this is the method that we use, method 00012. And I made sure my company is not deactivated. Okay, then save, save, save. Now let's go ahead. And now, and I'm gonna create a scenario just like this, just like this, okay, where we have, just like this, and see what's gonna happen. Okay, before that, let me just go to Pro again. I'm gonna do something, before I do that, let me just go here and I'm gonna show you something. Generalize a new business transaction. I wanna deactivate my company code. I wanna do it before and after, just, for making sure that you guys get it. So I'm gonna come here and I'm gonna double click here. I'm gonna find my company code, which is B217. And I'm gonna inactivate my company code. Okay, I inactivated my company code, and now I'm gonna go create, let me just kind of FB60. I'm going to create a vendor invoice, just like for that example. B217, here's my vendor, here's the date, and here's and now let's say here's about $3,000, or let's say make it, yeah, $3,500, and now I want to have two expense accounts. For example, okay, I have this one, this GL account, 4,200 and 4,200. Okay, they both debit. I'm gonna have here is one is 1,500, and the other one is about $2,000. The only difference now, I'm gonna have two different profit center, so I can make it real. Two different cost center, which is gonna be two different profit center. Hopefully I have that. I'm not sure. Let me just go check. Let me go check again. KS02. Hopefully. That's 7,500. I want to go here, controlling area, B217. I'm not sure what kind of cost centers do I have. Let me just check real quickly. Oh, I have finance and I have marketing. Okay, beautiful. So let's just come here. Let's go to the marketing. I don't have a profit center, so let me just get a profit center. So I want to have profit center. Yeah, I'm gonna have 1,000 as a profit center. Oh, this one doesn't. It's not good. So we'll make it different profit center. Let's see. 1,500. Okay, let's just go here. 1,500. So I have 1,500 here. So marketing is 1,500. Oh, change. Okay, anyways. Okay, so let me double check. Yeah, 1,500 in the marketing. Let me look at another cost center, for example, production or something. Let's say here I have production, and here I want to have 2,000. Doesn't exist. Professions doesn't exist. Okay, let me just create another one quickly. KE51, I believe. Just copy of this guy, and I'll say here 1,600. Okay. Okay, make sure. So 1,600 is created. So now I'm gonna come here and say 1,600. So marketing and production. Okay, right. Okay, beautiful. So now that's it. Now let me just shut out this. Let me come here. So now we said we want to have one is marketing and the other one is marketing. This is the marketing. I have cost center of marketing and I have another cost center which is production. You can have anything, so it doesn't have to be marketing production. And click enter. Oh, oh, this one it's not my profit, my vendor. Let me get my vendor number. No, it's okay. This is my partner. Click enter. And as you can see, make sure the profit center is different before you actually post it. As you can see here, now we have two profit centers, 15 and 1,600. Now let's try to post. So I just posted now. Let me go to FB03 and look at your document. FB03. Okay, and don't be fooled. Okay, because when you look here, this we call it the data entry view. So in the data entry view is always going to look like this. So as you can see here, credit to the vendor and debit to these expenses. I don't have the profit center line here. I'm going to bring it up. Let me just bring it up. You go here, change layout. Let me bring up the profit center. Go here, profit center. And here's profit center. You could just bring it up here. You should be expert now in changing layout. Let me just come here. As you can see here, here's my profit center. I'm gonna save that layout. All right. So as you've seen now, okay, as you've seen now. So now in the interview, this is how it looks. In the general ledger view, it looks exactly the same. There's no split. Ideally, what is supposed to happen? Anybody can tell me quickly? Ideally, what is supposed to happen?
It's supposed to show the splits, like the way you said the characteristic, how that payment are made of.
For which, tell me what's exactly, which GL account is going to be split and what's the split is going to be?
The one we did the document split, the expenses. 1,500 need to be split and the 2,000 need to be split as well.
Is that what you guys agree?
The vendor recon, that's 3,500, split into 1,500 and 2,000 for 1,500 for profit centers, 1,500 and 1,600.
Exactly. That's exactly what's supposed to happen. The recon account, this one here, is supposed to split, okay, to two different line items. One is going to be 1,500, the other one is going to be 2,000. The 1,500 is going to be with 1,500 profit centers. The 2,000 is going to be with 1,600 profit center. Does that make sense?
Yes.
Yes.
Okay. Now, why it did not work? Okay. You always see the splitting in the not in the data interview. Look at the screen transaction title. This is data interview. You don't see technically. You don't see a splitting here. You see the splitting in the general ledger view. But why in the general ledger view we do not have this splitting? Anybody knows?
Because it didn't activate the
Exactly. Let's document splitting functionality. Let's try to go ahead and activate it. So I'm gonna come here. Oops. It's right here. General ledger new, general ledger account new, business transaction. I'm gonna carry on document splitting. Under splitting here, I'm going to go here, activate it. Come here, click activate. Under the activate, and come here under deactivation, find our company code V217, and I'm going to make sure it's active. Save. Click here. Now I'm going to do it again. FB60. I'm going to do the same exact transaction. Same thing. Same thing again. $3,500. And same GL account, 1400, 4200, and here you're gonna see 1500, and the other one is gonna be 2000. It's exactly the same profit centers we had earlier. So we're gonna have market, production, and marketing. Marketing. Okay. Once you do that, you need to make sure profit center is actually there. Here's my profit centers. Let's save it. Look here, the system now is actually doing for the first time. Only for the first time it does this, but after this, it's gonna come smoothly. So now look what happened. Now let's start go and display our thing. FB03. Oops. Slash an FB03 again. And as you can see here, data interview, nothing. You don't see any splitting, nothing. You should be worried. But you come into the general ledger view. Oh, look what happened. Look what happened. So probably say, oh, what happened? Okay, so just let me make it. This is exactly what happened. So if you can see here now, the vendor. Let me sort it by this guy. It's much better. Okay, so now the AR, the vendor or the account payable is split. It's split to 2,000 and 1,500, which is 1,500 and 1,500. Does it make sense for you guys?
Yes.
Yes.
More clear.
Oh yeah, a lot of people say that. Yeah, it's really easy, guys. If you guys get the concept, and if you're able to actually say it, explain it, uh, it's very complex. In real companies, like really, if you're able to do this stuff, they'll look at you like if you're coming from from different planets. If you do it just like this in a few minutes or in half an hour or so, they'll think that, oh my gosh, who's this guy? Sorry about that. Anyways, any questions, comments? Questions, comments, nothing? All right. All right, so let's try to do this. Now I'm gonna do FB50. I'm gonna do something else, something funny. Let's see here. Uh, just simple transaction. So same thing. 4,200. So GL account. 4,200. Same GL account. Debit and credit. Same GL account. Okay, so let's say here we have, let's say $3,000. Debit GL, same GL account, but the only difference is we're doing actually different profit centers, different cost centers, okay, or different profit centers, okay. Okay, so same GL account, same amount, different profit centers. One is 15, another one 16. And if I post it right now, let's come get here, FB03. Let's go here. Let's see what happened. So this is the general ledger, the data entry view. Data entry view, this is how we entered it. The general ledger view, how it's stored in the table. Let's go into the general ledger view. Look here, there's no splitting, nothing, even though it's a separate, different GL account. And if you look here, if you bring the GL account here and you tell them, give me the total for each GL account, let me just say, give me the total for each GL account. And you tell them, no, I don't want, I want the total by GL account, subtotal. As you can see here, the total for GL account profit center is 1,500 is 3,000. The total for profit center 1,600 is 3,000. Okay. So this functionality now, I know for you maybe think, oh man, that's stupid. For accounting, they want to have something which we call a trial balance. So that's what they like to have. So now let's try to go, and I'm gonna do the functionality of zero balancing. So first of all, I have to go create a GL account, FS00. I'm gonna create a GL account. It's called whatever you want to call it. So I call it 5567. 5567. Very weird number. Click here, and I'll say, give me a, I don't know which others maybe. No, it's not. Liability income. Oh, maybe this is the worst one, man. Okay, anyways, let me just find another one. FS00. I'll say 665 6567, and come here. I call it other. Let's call it balance sheet and call it zero balance. Zero balance clearing. Zero balance clearing. GL account. Come here and control. Get our stuff here. Enter. Come here. G001. Just save it. So I create a GL account 6567. Now let me go go my configuration. New GL account. Go here under the general ledger accounting new. Go under business transaction. Go under the document splitting. And here we just go to the zero balance GL. Here's the place where we actually have to assign the GL account for the zero balance. So you're gonna select this one, the 000, and you click an account, and it's gonna ask you what's the chart of accounts, B217. And always you need to say a new entry and give you a GL account, and that's it. So this is how you do it. We'll make it bigger. Enter. Let me just go back because I know I went so quickly. So you come here to the zero balance. You gotta find this one here, the first one, 000. Then you just double click on the accounts. Then you provide your chart of accounts. Then you click new entry and just give you account. That's it. Okay, this is the first step. This is not it. This is not the only thing that you need to do. The other thing that you need to do, you need to tell the system which characteristics you want to have the zero balance. So I want to have it on the balance in the profit centers. You can have it on the segment in whatever field that you want. So you only need to check the box on USAFE. So that means now you have assigned the GL account for the zero balance. On the top of that, you've actually activated the functionality by actually clicking that checkbox. Okay, so we've done that. Now let's do the same test again. FB50, same test, same exactly everything. The first time it's gonna do like this little thing, but after it does the first transaction, it's gonna be smooth. 0304 2020, and you're gonna come here, same GL account, same exact transaction, guys. Debit and credit, same amount, 3,000, 3,000. But now let's see here. Same profit cost interest, same everything. So again, here's one for marketing, one for production. Click enter. Make sure that the profit center is different on USAFE. Save it, save it, save it, save it. This is a major change. This is a very major change in real project. That's why it compiles all the time. All right, so we just did the posting. Now we'll start to do FB03. As you can see here, okay, as you can see here, the total amount for 1500 profit center is 3,000. Total amount for 1600 is 3,000. So it's not good. What the total is supposed to for each profit centers?
0.
Zero.
Ideally, but we are in the data entry view, so don't blame it. Let's go to the general ledger view. Do you see now? The total for profit center 1500 is 0. The total for profit center for 1600 is 0. Why? Because the system added a new line items, as you can see here. New line item with the zero balance GL account, and usually it's opposite to whatever is the original document that you have. If this one is debit, the first one, this one is gonna be credit. This one is credit, it's gonna be debit. Does it make sense?
Yes, it does.
This is everything that you would ever imagine about document splitting. Questions, comments?
Ahmed, is it compulsory for every company to do document splitting, or
It's not mandatory,
so?
no? It's not. Yeah. If the company, they don't care about having the profit centers or the segments or whatever in their transaction, they don't have to. But most companies, they do, especially if you're doing, if you're just one business unit company, nobody cares. But if you are like having, if you're a global company where you have 16 different kind of products, or you have 100 type of products, or you're a conglomerate company where you have different kind of companies, different industries and stuff, it gets so sensitive. Companies from one business center, from one profit center to another, from one segment to another, they buy from each other, they send stuff to each other, and all the tax law, all the legislation, they're trying to avoid all this kind of stuff, because company could buy from another company and they could just kind of record it as a profit, as a sale, and as a profit. Then investors, they look at it and say, yeah, this company is profitable, but as a matter of fact, it's not profitable because they're selling between each other. So just to inflate their profits and revenue, that's why the companies now, the legislation, compliance, and even investors, they want to have visibility. Which company bought from which company, from which profit centers bought from which profit center, which segment bought from which person. They want to see those kind of internal transactions. So it's very critical. It is very, very critical. That's why, I mean, you could have a big fight just because of miss profit centers, or miss assignment between cost centers or profit centers or something like that. Make sense?
Yes.
Yes.
All right. All right. Any questions, comments? All right. No questions, no comments. So this is your task. Task is very simple. To create new GL. New GL transaction. Make sure you have an active and your balance configured. Anyways, passive, you don't have to worry about it. The system is going to take care of itself. Uh, Make sure you have some transactions in the system. Make sure you have done it yourself. This is the last thing that you would do in terms of system work for today, for maybe for this session, for the class. So,
Okie dokie.
all right. Anybody has any doubt or misunderstanding what the milestone is? No.
No.
Oh, awesome, awesome, awesome. You guys have done an amazing work. You've done an amazing job. Worked so hard in the past 13 days. Is it 13 days? 14 days?
14.
Yeah, 14 days. Yeah, you guys done an amazing work. So definitely, just for me, my plan was to actually go and start with the strategy, but I don't think it's we can definitely work with the strategy tomorrow. I want to spend the time with you guys, just maybe just go touch upon different topics, just like kind of I'll try. Uh, or you know what? No, I don't want to talk about production planning right now, but we'll talk about it later on. But I don't want to talk about it because it's different story, completely different story. I want to just like keep it open. If anybody has any questions, comments. Here's the good news. I mean, today there's one guy I was not expecting. I was not expecting. Guys, he got one interview on the phone, okay, and he got the job. 45 minutes interview. He get the offer. Imagine this guy. He's the luckiest person I've ever seen. Usually it doesn't work that way, but he got like 45 minutes, and they decided they gave him the offer. He he got the offer, and that was amazing. And this guy, this is his second job he applied to, so he's been in the market for almost 4 days. It's about 4 days, 4 or 5 days. Seriously, not even a week. I know it's not even a week. So 4 or 5 days. That was really for me. I was saying, oh my gosh, and that's why if you guys see here, I'm gonna share with you everything. So uh, here's my WhatsApp. Oh, my phone is about to die. Just give me 1 second. Not anymore. We have a we have a we have different websites for different WhatsApp group for the market. And this guy here, and you can see everybody gets the job, everybody gets something here, blah blah blah. So like I said here's the guy. I'm not sure if you know him or not. He actually, yeah, he get the job. And I want you to see when he actually enter this session. So if you go up, we'll see when he actually got into the market.